Hey guys, this is Julie, Toyota Trading Strategies. I want to go over what happened to the market today. Some pretty important reverses of policy came out today. The Federal Reserve Chairman gave a speech, a quick 10-minute speech at Jackson Hole, and declared war on inflation, indicating that he will do whatever it takes to combat it, even though that may forcefully enough combat it that it may be painful to the market, and um, even though that may cause a downturn, economic downturn, he is going to proceed with a path of reducing liquidity as well as raising interest rates. So we all know that supply chains have been a big part of this. So hoping that the supply chains will open soon. Um, Here is what happened in the market. Here is the ES. You can see that we were bouncing off the quarterly ones inside our one spreads of the monthly quarterly. Came inside the quarterly monthly box, and we're playing with some weekly daily levels um, inside the range, which we'll see on a different chart. Um, and it just really, we're in a free fall down next week. Wednesday will be the last day of the month. See if we bounce and close above that 4008, or if we clear it. It looks to me like we're going to be clearing these zones, and perhaps even trading down to this third standard deviation again and challenging that. Due to the nature of the forcefulness of that speech, he is saying that they don't have your back. They're going to do this path, and so that market really, really took that to heart and tanked. Here is the 30-minute chart for ES. The monthly is the thick white lines. The weekly are these uh, dash dot lines, and you can see we blew through the weekly, got to some daily levels, blew through those, and weekly twos, threes got taken out. There's your two. I thought it was going to pivot on the two, and then it sold off trying to reach the three, didn't quite get down there. But again, we're very close to this monthly level. So there's going to be a lot of support at 4013.25, as a put wall. But given the forcefulness, the nature of his comments, I would not expect that level to hold. I think this is extremely bearish setup, and you know they're telegraphing to the market that they don't have your back anymore. They're going to be curtailing liquidity, tightening, as well as hiking. Tightening and hiking, and I guess we have to hope that the supply chains will open soon. Um, so let's take a look at NQ. And it's going to be a very similar looking situation. The third standard deviation, I wanted to come over here to see when was the last time we hit that level, and it was September through October of 2020. So we're going back a couple of years in time to test this area, this ledge right here, is my guess. I mean, the direction is clear. We have Bank of America coming out and already and telling their customers they might want to consider selling a few of their stocks. So buyer beware in a market like this when the Fed no longer has your back, and 14, 15 years of Federal Reserve policy is suddenly changed. So they will clearly be selling calls and not selling puts, and that means that they're going to be selling these ones. When you sell a call, you're selling the one. So I would expect these levels to get blown through if my hypothesis is correct. And they sell calls and they will buy puts. And once the put starts, and they just like it happened today, they're writing it down also as their customers are closing their accounts. They're raking it in. So very interesting low volatility and afternoon low volatility, and the momentum. The market was trying to come up, so all the hedge funds and CTAs who are long in the market are hitting these levels, trying to force it up to the VWAPs, and did not happen. It just stayed short. That is how bearish this market is. So I wanted to rush this video out because of the importance and of the change and the suddenness of the market direction change turnover, and let you act accordingly. I think I would take a look at your portfolio if you're holding a lot of equities. All right, thank you so much.